Hello everyone. Today is Friday and I'll walk you through the price action analysis of Bank Nifty futures. It's an interesting day today that will help you understand some of the patterns in detail and as well as why patience is important. Okay, market is still on, but I'm done with my uh, trading today. Okay, so what happened is that this dark blue line is the low of Friday. Sorry, not Friday. Uh, Basically, it's a low of Tuesday, which is 11:10. Yeah, okay, and this is the day where in Indian markets there is some concept called Muhurat trading. It's considered to be an auspicious day. So there's a trading for 1 hour. Okay, so that's this price action is basically that happened on Wednesday, and then this low is the low of that Muhurat trading day. Okay, so what you see is basically price gap down considering this price action, and it basically tried to go down, failed, came up, uh, and it still couldn't manage to close strongly. What you see here is a strong bullish close above yesterday's line. I'm considering this as yesterday's low. More trading is something that I'm skipping for now. Okay, I'm considering this strong close because it is just it is closing above yesterday's low. Okay, it's actually not a strong bull bar. It's a trading range bar, and it's one of the important things is to identify the type of bar, which is whether it's a trading range bar or a trend bar, right? Depends on the open and close of the bar and the tails on both the sides. If there are minimal tails on both the sides, possibly it is a trend bar, otherwise it is a trading range bar, right? So what happened here is uh, this particular bar kept the range in these two levels, right? These are the two blue lines that you see. That's basically high and low of bar 1. So the range has been established. What do you see next? Bar 2, immediately bulls gave up. Bears sold a close of this bar 1 and they tried to push the price down below this dark blue line, which is a possible support area. What do you see here? They did poke below it but couldn't manage to close below it, right? So what are the things that you can see here is possibly bulls are holding the ground. Okay, they're not letting the bears own this price action, at least as of now. Okay, no setups at this point of time. We still wait for further price action to develop before we decide to take any trade. But we have some context, which is bulls managed to hold the ground above yesterday's low, and it has done it for the second time. What do you see next? Okay, if the bulls managed to hold the ground on bar 1, why did it not continue immediately? Why is it stalling? That's the point that you have to bring up. Okay, next, bar 3. They did not allow bulls to take control, immediately sold. The open is basically same as bar 2's close. So they sold the close of bar 2 and pushed the prices down. And it was a decent bearish bar. Even though you see a tail here, look at the body. Body size is more than the tail of this bar. So bears want this bar, right? So what do you see here? This attempt by the bulls is possibly failing, right? Do we take any trades at this point of time? Not yet. What do you see here? One bull attempt, right? And then there's a failure here. Bears are coming down. Okay, the price has not gone below bar 1's low. It's still a trading range action at this point of time, right? What do you see next? Bar 4. Now this is very important. See what is going on here. Bar 4, bulls bought the close of this bar 3 and they try to push the price up. Okay, what happened? It did go close to yesterday's low, this dark blue line, but it failed there. Those bears who failed this breakout above yesterday's low, they came into picture one more time and they basically absorbed all the bullish pressure that was being applied, and this bar has a big tail on top. What is it telling you? First bull attempt, this is the second bull attempt that is failing. The two attempts have been made by bulls. So for me, it's a type of triangle. It's not a textbook pattern, but this is what I have been observing since long. It's basically a price action context, a number of attempts that have been made. It's that simple. Let's not make it any complicated. First attempt by bulls and this is the second attempt by the bulls. Where are we as far as the context and location is concerned, because that is what is more important than the signal bar. Context is bulls try to hold the ground, but it's failing. It's failing for the second time now. This is a weak attempt by the bulls. So context is that bulls are weak, possibly bears are taking the charge, and location is below yesterday's low. So good location, it's below EMA, it is below yesterday's low. So good location for short trade to be initiated. Bad signal bar, yes, but at least in first few bars of the day, I'm not really caring. There are some exceptions that I have mentioned in my previous videos, and I'm not getting into those at this point of time. What I need you to understand is this analysis. How do we analyze what is going on in the market? So as I mentioned, bull attempts are failing. This is a clue to act fast and take the short trade, right? What is the probability? Maybe 50%, maybe 60%. But the clues that have been dropped are telling me that it's a good trade, and that's what you go with. You In trading, there's nothing certain. There's no 100% guarantee of a result that you are expecting for. You go for the setups that you know work well, okay, and follow your rules. And that's why you see the trade, short trade was initiated below this bar 4. It triggered and it closed very strong at the low of the bar, which means this was a possibly a good trade, right? Now this being a trading range bar, there was a possibility of the failed breakout and price coming back up all the way. Yeah, that is there, but you have decided that this is a very good setup to trade, and trading range price action is a possibility. It has not been established yet, right? And that's why you're going for this setup and then bidding on it. Okay, so you see that this is a strong close and it continued. I'll just show you the way it looks like when you place the trade, right? This is where you place the trade, right? 16819.80 is where it got filled for this trade, and the stop loss 10 points is what I keep telling, which is basically from the entry point, and then the target profit target booking is basically at this level, right? I have shown this for one contract just to explain the concept, right? This is how the automated order placement helps in avoiding the delay and the hesitation. These are the some of the number one or causes that basically stop you from making decisions or pulling the trigger. Okay, this is how you can avoid those things. The moment you see a setup, place the order, okay, and it places the remaining orders automatically. Okay, now what you see here, this particular bar went to 16,800. The profit target was around 789.80, right? And that what hit in this bar, this low, right? You see this Fibonacci extension here of bar 1's range. that is a possible profit target, right? So that's basically 763.41. That also got filled in this bar. So your 30-point target and your 50-point targets were made in this bar, right? Now it's up to you how long you want to carry on with this trade, but you shouldn't be too aggressive and you shouldn't go for 100 points on every single trade. As I said, you should have at least one target which is a conservative one, and it's all about being consistent and not being heroic here, right? 30 points on part position, or let's say part 1, 50 points on part 2, and you can keep the remaining open with the stop loss mode to break even and let it run if it runs. What happened here is uh, at this measured move target, which is the Fibonacci extension of bar 1's range, um, everybody basically felt that this is a good level to buy again. They booked the profit and bulls took the charge. Maybe they were waiting. All those bulls who held the ground here, now they are coming back in here. You see the lower, the higher lows that are being maintained here, bar by bar, right? And 1, 2, 3, 4, 5 bars consecutively basically negated all this breakout, right? And on this bar, if you had held the part position for the short trade that you initiated here was hit, right? And you're out of the short trade. So you made approximately 30 points on part 1, 50 points on part 2, and break even on part 3, right? With a risk of 10 points. Now what do you see? This is a failed breakout below bar 1's low. So looks like trading range day is coming into picture, right? So this is all about possibilities and analyzing what is going on. Even if you had initiated a short trade and you got stopped out, forget about it, move on, right? What you see next is a failed breakout and price coming back into the range that has been established by bar 1. Now you see up move, a strong up move, right up to this bar. This bar closed above moving average as well as the bar 1's high and making a high of the day, right? So possibly the trend has changed, but do we know that for sure yet? No, because for now we know it's a trading range behavior. Even though you see a strong up move, what is the context telling us? Price failed below this bar 1's low, came back up. Price is breaking out of bar 1's high, but we need to see whether there's a continuation or not. What do you see? This bar, the strong bear bar, failure, continuation for the bear, continuation for the bear, right into the moving average, closing below moving average. Okay, now do you take short below this failed breakout attempt? No. Why? Because at least as far as I'm concerned, once I see a failed breakout on one side of the uh, range, and if it is failing on the other side of the range, I'm mostly going for second entries. I will go for first entry only if it is happening within first 3, 4 or 5 hours, right? If it is happening maybe on a 1 minute chart, it's happening after 15 minutes or so, so around 15 bars, I'm not going to take the first entry, especially after there is such a strong up move, right? And you can see that that helped, because even though this could have been a quick scalper for someone, right? And then you would have gotten out quickly. But I'm going for swing trades when I'm looking at least 3 times the risk, and that was not possible here. Uh, what you see here is basically bear strike, 3 bars consecutively, but bulls are providing the support. This strong bull bar is not letting the bears take control. This is another attempt by the bears, but bulls bought a low below this bar and pushed the prices up. And then you keep seeing these consecutive bull bars and prices going up. But this is all beyond my target of 9:45, 30 minutes from the open. So what you see after that is basically, I will explain it briefly, the concepts, which is basically it is going for a third leg now. First, second, and third. This is where you can see that this particular line, trend channel line, is where the prices start. The profit booking was done, and there's a pullback that you see. These patterns keep repeating uh, every single day. You need to observe them, and that is the only thing that you need. You do not need any indicators to tell you where the price is going. Bar by bar, story is being unfolded. That is enough for you to understand which side is winning, and accordingly place yourself to take the trades. Okay, so there were multiple other trades that were possible, but I'm sticking to my plan. This is the trade that I saw, and that's the only one that I could initiate. But there were other possible trades depending upon the type of psychology or rules that you follow, and within 30 minutes there were possible multiple trades were possible, but it's up to you. It's all about being consistent. That is much more important than being heroic. It's all about pulling in those 30 points, 40 points day in and day out, and making it consistent week on week basis that adds up on a month on month basis, and year is profitable, right? Okay, I hope it helped. Thanks for watching.